talking about two vital Forex trading applications that we must learn how to operate for us to trade Forex. And these specific applications are the MetaTrader 4 and the MetaTrader 5. They are the most popular Forex trading apps, and if you want to trade Forex, you must need to know how to manage these applications. So the first thing you need to learn how to do is learning how to log in into your MetaTrader accounts. So for you to log in your MetaTrader accounts, you open the MetaTrader in your phone or your system. So for phone, for demonstrating purpose, click on here, new accounts. Click on new accounts and you log into an existing account. So this process should come after signing up with your broker. So for example, let's say the account you want to use login is a demo account. So you click on log into existing account and then you select the name of the server. Select the name of the server. So in this specific illustration, we're using meta quotes. The name of the server will be in either the mail or in your broker website where you open your trading accounts, and you will see all the relevant login information there. So first thing, you come search for the server. So let's say we want to use meta quotes now. So we search for meta quotes, which is the default server for MetaTrader 4 and MetaTrader 5. Click on the meta quotes demo and then input the login number, whatever it is, and then the password. Then you click on sign in, and that's basically all. Your account will be logged in. Now once your account is logged in, it will take you to this home page interface where you see different currencies. So if you're looking for a specific currency, you want to add a specific currency, this is MetaTrader 4, similar thing for MetaTrader 5. Just click on this icon here, this plus icon, and then you'll be able to search for currency. So let's say, for example, I want to add gold, XAU USD, that is gold. So here is gold. Click on this plus icon and it will be added to the market watch. So this section like this is called the market watch, and this is where we add currencies. We have done how to add currencies. Now the next part is opening charts. So let's say you want to open the charts of Euro USD. You click on the currency and click on charts, and then it will load up the chart interface for that specific currency, Euro USD. And as you can see, there are different time frames to navigate through in the chart. So this is the smallest time frame in MetaTrader is 1 minute. So this is 1 minute, this is 5 minutes, 15 minutes. And then we have the hourly charts, 1 hour, 4 hours. And then we have the daily charts, 1 day. D1 is 1 day, W1 is 1 week, and MN is monthly charts. So if you come into the 1 minute chart, every chart you see here measures 1 minute of activities. So this is a crosshair tool, this tool here. Click on it so you see reading from the specific candlestick. So if you click on the hourly, all the candles will measure 1 hour interval of price activities. Now every candle will give you information of open, high, low, and close. So every candle tells you the narration of price activities within the time that the candle is measuring. So within this specific 1 hour time frame, the information from this candle is market open at X and X price, closed at X and X price. The highest price it got to within that 1 hour trading window was this. The lowest price it got to was that. So that is the basic information from candlestick when you open your Forex trading charts. Then the next thing you want to know is knowing how to place trades. So for you to place trade, just click on this point here, trade. Since we are using MetaTrader 4, it is similar in MetaTrader 5 as well. So click on trade or tap anywhere on the charts. This will pop up and you click on trade here. Now click on trade, you enter your lot size volume. So let's say you want to trade one standard lot, buy or sell. So you enter your volume. And that is how to place trade in MetaTrader. Now, I just placed trade, and the form of order I used is what we call the market order. Market orders are instant executions. So when you execute a market order, you buy or sell at the immediate or current price. So for example, it's just like walking into a boutique and buying something for the price it was offered in, buying a shirt, buying a dress at the price it was offered in without any form of negotiation. So that basically is market order. You just execute based on the current price. Now you executing based on the current price is because you already see the current price as a fair price, so you don't need to waste time negotiating. So that instant execution is what we call the market order. We also have pending orders, and with pending orders there are two categories of pending orders. We have the limit orders and we have the stop orders. Now let me illustrate this. When we use limit orders, it simply means we have the expectation that price will fill our order and reverse. So for example, you believe that price is going to come down, but currently the price is too low for you to sell. Or let's use a buy example. So let's believe currently you believe the specific price of an asset is too high for you to buy. The specific price of an asset at the current price is too high for you to buy. So let's assume the asset current price is here and you don't want to buy. Let's say you don't want to buy it at 10. You want to wait for the price to drop. And if the price drop below 5, so let's say maybe you want to buy it at 4. So after doing your analysis, you see that 4 is a fair price. Now the market is still at 10, but you don't want to buy at 10. So you set a limit order at where you want to execute the trade. If you put the limit order here, this form of order is called the buy limit, when you want to use a limit order for buy. So if you put a limit order here, the information you have given the market is simply current market price is too high, but if price drop to this level, buy X lots for me, and for you to make money in this position, price has to go up. But if after filling your order price keep going down, that means loss. But if price go up after filling your order, that will be a profitable trade. So a buy limit order is an order that is placed below the current market price because the current market price is considered inflated or too high. The opposite is true for a sell limit. So you want to sell a specific asset, but you believe the price is too cheap to sell for. Fine. Imagine you have a business. You will not just sell at any price anybody negotiates. So it's the same thing. You have your currency and you believe it is too cheap. You want to hold it and wait for some level of inflation. You're not just going to sell at any price. So let's say you have $1,000 worth of let's say you have $1,000 and the current exchange for $1,000 is 1,500 naira per dollar, and you believe that this valuation is too cheap. You can set a sell limit order at, let's say, maybe 1,600. That anytime naira gets to 1,600, the platform should automatically execute a sell for you. So you don't need to be watching price to actually move. You just set your limit order here. This one is called the sell limit. So what will happen is once price move from 1,500 and gets to 1,600, your sell will be executed. And if markets continue coming down, you will make money. So these are the rundown of the limit orders. Then the next form of orders, we have the stop orders. So unlike limit orders, stop orders are continuation orders. Simply means what happened with a stop order is you expect markets to continue after triggering your stop order. So it's just like you see price increasing. So let's say price is currently at 1 and you see price increasing, but you believe price will get to 100. Then you are not sure yet how far price will go from 1, or if price is in good momentum already. So you can decide to say, okay, if price gets to 10, then I know that is a good momentum. So from 10 I will buy and hold it up to 100. So this is why we call it a continuation order. So the same buyers from 1 to 100, you got in somewhere in between 1 to 100 and you expect it to continue. So unlike limit order where you trigger and expect a reversal, stop order you don't expect a reversal. So buy and continue moving upwards. That is the command for a stop order. So if price is going up, tag me in and continue going up. This is stop order. This is buy stop. This is how buy stop work. And then for sell stop is if price is coming down, tag me in and continue going down. This is sell stop. This is how sell stop order work. So in summary, the buy limit will move from a market price higher than where you place the order, come trigger the order, and you expect reversal for you to make money. This is buy limit. And the sell limit means the valuation of the current price is too cheap. You want to wait for price to go up and trigger your limit order, and you make money if price comes down. So this is sell limit order. And for buy stop, simply means you expect the inflation to continue. And for example, a buy trade, so you get into a buy and expect price to continue after your buy. And then for a sell stop, you get into a sell and then you expect price to continue. So you place the buy stop. A buy stop is placed above the current market price. A sell stop is placed below the current market price. A buy limit is placed below the current market price. A sell limit is placed above the current market price. So those are the differences with the placement of these specific orders. There are other form of orders in the platform that you ought to know about as well as a trader. There is the take profit and the stop loss orders. How do you set a take profit and stop loss? So those two terms, they simply mean what they sound like: take profit, stop loss. So as traders, we have to control risk, and we actually have to reap the fruit of our labor by taking profit or to limit the impact of being wrong. So trading is speculation, so there is no guarantee that you will win every trade. There is no guarantee you will win every trade, so we go into every trade with risk management. One of the methods of controlling our risk is by using a stop loss order. So how do you set a stop loss order? First, you will have to make sure you have an open position, or you can set it while configuring a position. But let's start with when you have an open position. For example, this open position we opened the other time. So you click on trades here, so you'll be able to see the running trade. Then click on the position like this, and you'll see, long press on the position, you see where to modify the position, modify, and then you impute the stop loss value that you want the trade to have. So for a stop loss for a buy trade needs to be below the entry or below the current market price. So once price move above the entry, yes, you can set a stop loss above the entry. You can set a stop loss above the entry, but it has to be below current market price for a buy order. Then for a sell, okay, let me take this out and use different tabs. Okay, now this is cool. So for a sell, the stop loss has to be above, because you make money from a buy position if market moves up. So this buy position, as long as market keep moving up, I will make money from it. But then this sell position, I will only make money from it if market moves down. So the direction of profitability for a sell trade is downward. The direction of profitability for a buy trade is upwards. Be it a buy limit, buy stop, sell limit, sell stop. Their direction for profitability is buy upwards, sell downward movement in price. So the stop loss will be the opposing side of the profitability. So for example, if you are in a sell trade, if price moves up, that means you will be incurring loss. So your stop loss, where you give the market the command to stop your loss, should be above the sell trade. Or if price is already below the entry of the sell trade, then it can still be below the entry. But as long as you're setting the position and the position is not yet in profit, then your stop loss should be above. The inverse is true for a buy trade. So for a buy trade, your stop loss should be below the trade, because you only make money from a buy trade if the current market price move upwards. You make money from sell if price move downwards. So the opposing side to the direction of the profitability is your stop loss. So let's say, for example, I want to set a stop loss for this sell, and this is the price level I want to set it to. So let me copy the details of that specific price level. This is the point there. Just copy it if that is where I want to set the stop loss at, maybe according to my analysis. And then I'll come here, click on trades, click on the position I want to modify, long press it, click on modify, and impute the value of the stop loss I want to trade with. So this is it. I impute the value of the stop loss, click on modify, and then you see, look at it here, the stop loss has been set. So it has the SL level that I imputed in it. The same thing for the take profit. So this is okay for the sell position. So let's say I want to take profit here. I want to set a take profit here for this sell position. I'll look at the price level 1.03 blah blah blah. But since I already placed the line, let me just copy the properties to make life easy. Then click on the position you want to modify, the sell position, click on modify, and then impute the value for the stop loss. Boom. There you have it. Sorry, the value for the take profit. There you have it. You have take profit set and stop loss set. So experiment this. Try to set a take profit for a buy position. Try to set a take profit for a sell position. Do the stop loss as well. Make sure you are familiar with this. Now, after this, so how does the take profit and stop loss work? If you're in a buy position and the market moves against you, which is the direction against you, okay, we set for the sell trade. So if you're in a sell position and the market continue moving against you, so sell, we have the stop loss here. Let me clean up the charts. Fine. So if the current market price continue moving upward and hit this level of the stop loss, this one lot size of trade I got in will be closed once price hit this level. Then if price continue moving downwards and hit this take profit level, then this trade will be closed in profits. So if it hits the stop loss, the trade will be closed in loss. So rather than blowing your whole account in a single trade, this is what we do with stop loss. We set a stop loss to limit the losses we can incur from that trade. We set a take profit to automatically close out our trade once our profit target is met. So that is how the stop loss and take profit order work. And the next thing you have to learn how to do is knowing how to close trades. We now know how to open trade. You want to learn how to close trade. So for you to close trade, it is very simple. Click on the trade, just swipe, and that's it. So you can see this trade current PNL is -7. Drag, you see I'll be able to close the trade. Now you can close trade in parts. Once you swipe and come to this menu, you'll notice you also have lot size here. When you want to enter trade, you still have lot size. When you want to close, you also have lot size. So let's say I want to close 50% of this position. What will 50% be? That is 0.5. So if I want to close just half of the position, I can do this, and then half of the position will be closed. But if I want to close a full position, for example, this one, I can just close it, and that's all, without adjusting the lot size. So you can keep closing partials from a specific position until the position hits minimum of 0.1. So for example, I have 0.5 there. So if I close 0.49, this is the minimum lot size that the broker will permit me to trade, so I can no longer divide this position. So as you can see, this is 0.01. I'm not allowed to type anything less than 0.01. Look at it, I'm punching my keyboard, and as you can see, there is no other digit that can be typed on screen. So 0.01 is the minimum trade size that can be executed across many brokers and standard account types. So once you get as low as 0.01, that means the position is no longer adjustable. It only requires full close at that specific point. So that is how to open, close trade, set SL, set take profits we call stop loss SL, we call take profit TP. So when you hear those terms in forex trading, just know what they mean. SL TP, and all of that. So in conclusion, now we have talked about how to log in into MetaTrader 4 and MetaTrader 5, similar procedure. Then we also talked about how to add currency pairs and how to open chart, how to place trade, how to use different types of orders, and what they actually mean, what the different type of orders actually mean and how they function. We also talked about how to set take profit, stop loss, and what they mean and how they work as well. So this basically is how to use your MetaTrader. Over to you now to do the practical side. Make sure you install your MetaTrader and check and practice. Make sure you know how to use it. So if you have any question, drop them in the comment section. Like and share this video with your friends, and also check the description to see any relevant resource link group where you can chat and communicate with other traders as well. But for now, bye bye.